Hi, and welcome to another daily recap. So today I'm going to recap day 135, and it's November 12, 2024, Tuesday. So to summarize today, I didn't get any trades on both EU as well as DU. So let's jump into the charts and see what happened on both EU and DU and why I didn't take any trades on both the pairs. So starting off with EU on the daily time frame, the daily structure is bullish and the daily swing structure is bullish and the daily internal structure is bearish. So let me zoom in to see the current price action. So with the current bearish momentum, all I can expect is the price to take out this uh, swing low. So before taking the swing low, I just want the price to mitigate this demand to supply flip and obviously take out this low time frame buy sell liquidity. So this would be my buy sell liquidity target. If the price takes out this buy sell liquidity, then I would have much confidence in taking the shorts and targeting these sales at the weak swing low below. This is the 4-hour chart, and you can see this is the daily buy sell liquidity, which is an equal highs in the 4-hour chart. But this is also a supply where the price can respect this supply, and then push out. Why? Because price has a tiny bit of inducement right here. Or no, I can't call this as an inducement because price did not chalk bearish, but I can call this as inducement because it has got a parallel gap. So zooming in, yeah, as I already told you, this could be an H1 POI or this could be an H1 buy side liquidity because and the price can take out this liquidity above to mitigate the fair value gap and then it can start to push down. So what I can do is wait, I'll mark this as the buy side liquidity and I'll wait for the price to mitigate the 4-hour fair value gap and then wait for the H1 to chalk bearish and then take the trades from the freshly formed POI if that is the case. But I'll show you in the H1, none of that is possible. Because of the current bearish momentum, even if the price takes out this buy side liquidity, this small buy side liquidity, the price will rally down. So what I expected is all I want is the price to take out this buy side liquidity and then chop bearish. If possible, I'll be getting a short straight. Otherwise, if the price rallies down, then nothing is possible today. So forget about all these POIs above, forget about all these POIs. I just want to concentrate only on the immediate buy side liquidity. This is my game plan. Price taking the Paisa liquidity, stock bearish, game 15 entry. So what I can target the week internal low, the previous day's low, the daily swing low, and yeah, all this I can target. COD, I expected the price at least to take out this Paisa liquidity, but nonetheless it didn't take any of them, and the price started to rally down. Like since it had all the Paisa liquidity with it. I mean, since the supply was in total control, price started to rally down and take out my daily target. So yeah, this could have been the buy side liquidity sweep, and I could have taken the trade from here. But after taking this buy side liquidity, this this candle was not promising enough because this was a sell side liquidity sweep, according to me. So price could just sweep the sell side liquidity below and then push up, take out the buy side liquidity, and then it can start to push down. So candles like this are low probability, and POIs which made a displacement like this, it's definitely a low probability. But sometimes when the supply is high, obviously, uh, price will respect these kind of POIs, and this market structure will continue, and it goes down because the desired target. But yeah, the thing is, keep doing the same thing again and again. Most of the time, this kind of pattern fails, but this time it played out. The thing here is, market shows the same information again and again and again. But for a novice trader, since I am experienced of since I'm having around 6 months of experience, now I have become an experienced trader. So trading experienced trader is not a trader who have ton of market experience. Like I'm having 3 years of 2 years of market experience now, but according to me, I'm just having 3 to 4 months of experience because for the past 3 to 4 months, I've been trading with one single strategy. Before that, before that, I was on the level zero because I was switching trades. There was FOMO, there was FOL, so much of emotions running out. But now I knew that after seeing this kind of pattern playing out, my my mind did not bother to include these kind of POIs into the trading regime. Why? Because I knew that this would fail most often. So I'm just letting go of this one and waiting for my perfect setup to play out. So this is the one that determines my my current situation as a trader when compared to my last year of trading. So yeah, I know I'm progressing. So let's see how much I can scale this up. So jumping into video, okay, so like I said, the thing is, yeah, I misplaced the images. Just give me a sec. Perfect. Now it's perfect. Okay, jumping into the GU in the daily chart. Okay, here you can see the swing structure is bullish, internal is bearish. So zooming in to see the current price action. The price of the buy side liquidity and now it has started to come down. So this is the supply where I can expect the price to mitigate and then push the price down. But the thing here is it's already been slightly mitigated, so I can expect this buy side liquidity to be taken out before the price pushing down. I can expect, but that won't happen. This is the 4-hour chart, and the price has taken the swing low, which means all I can trade is the phase A2. So this is the low probability supply, which means this can be used as an inducement for this supply above. Thus, I'm marking this as the buy side liquidity. So if the price takes out this buy side liquidity and taps into this POI, then that would be the high probability short, and I can wait for the A2, the price to chalk bearish in the H1 time frame, and then I can look for shorts. So the longs are valid. Why? Sorry, the longs are valid when the price takes out the daily sell side liquidity. And once the price takes out the daily sell side liquidity, I'll be waiting for the price to chalk bearish, so chalk bullish. And then from the freshly formed POI, I can look for longs. Shorts, price needs to mitigate the high time frame POI, chalk bearish in the H1, then I can look for longs. It does. High time frame, it does not always needs to be the high time frame POI. It can be a time-based liquidity or a strong structural liquidity. So yeah, this is the one that I'm talking about. So first, let me introduce the H1. The swing structure is bearish. Internal is also bearish. Now we can zoom in and discuss the current price action. Yeah. So this is the POI. This is the strong internal high. So I expected this high to hold, and this is also the 4-hour buy side liquidity. I know that there is ambiguity, but for the sake of convenience and ease of uh, analysis, I'll mark this as the strong high. If the price takes out this 4-hour buy side liquidity, then we can discuss that later. Now, this is the H1 buy side liquidity, so which I'm expecting the price to take out and to get this PY and then start to push down. Why? Because with the current bearish momentum, you can see how steep it is one. So with the current bearish momentum, I'm not expecting the demand to take control and push the price all the way up. So there can be a minimal pullback, like we see the pullbacks right here. It is very minimal. Also, it is very minimal. You see, very much minimal. So all I want to see is that minimal pullback onto this buy side liquidity point and then chop bearish. Then I can look for the price to mitigate this PY and I can look for shorts. So that's what I expected. That nothing wrong in expecting. So what I should have done is then I realized that what I should have done is this itself is a supply. This itself is a supply. So I could have waited for the price to mitigate the supply and then uh, entered using the low time frame entries and then entered shorts. So this is the one that I failed to do. So I'll show you what would have happened. But before that, let me finish this analysis. So at 11, I expected this POI held and I expected this London high to be taken out and I wanted the price to mitigate the supply. Then later I decided, okay, this POI can hold and I wanted to take trade of this POI. So it did not happen and price did not take out the London high and the price started to push down. I just ended my day. because price has already hit my daily target and the session got over. So now I just want to introduce you what would have happened if I had taken this POI because it has web liquidity. So let's see what would have been the situation. I know this would take a little bit more time because I didn't have the trading view open. This is November 12, 2024. G. So currently it is Jan 5, 2025. For a long time I didn't update the screen recordings and recording. I'm recording one by one as and when I get the time. Probably I'll be finishing it as soon as possible. So, so it's November 12, right? November 12, 2024. Go to, yeah. So what would have happened if I had marked this as my H1? November 12, this is my H1 viewer because it is in line, so I can look for shots. Okay. Price the bearish and the fractal structure is also bearish. So let me, this is actually phase A2, right? Yeah, phase A2. So price not reacting after my time to view, right? That's valid and it is in line with the medium time frame order flow. Yes. And medium time frame order flow is one of the criteria met. So once again, if you see the POI criteria and medium high time frame supporting Indian time frame area, yes. So this is how I validate each and every trade. So since I am trading with H1, I have sufficient time to validate the criteria, the POI criteria, the risk factors, everything, and then place a calculated rate. Test of the liquidity, yes, it has of the liquidity. You can see this candle high is been swept. So this is a minor liquidity sweep. This is an H1 time frame. So there is a quarterly high shift. I mean, the quarterly high has been taken. That's the displacement. Yeah, it has a displacement. Made shift in the order flow. No, because it has already made shift in the order flow here. It is just in continuous. So yeah, unmitigated. Yes, there's an engagement. Probably not. Probably not. All during the kill zone. No. Start within the high time frame POI. No. Has it flipped an order block? No. There is nothing to that. So only 3 out of 4 criteria met. Uh, box is not it, but still there is 75% chance of this trade being played out. So what are the other confluences? There is no Asian liquidity sweep and supply chain is not being respected because they have been skipped, but there is no opposing demand zones. So there is a time-based liquidity to target. Probably no. Structural liquidity, no. Low resistance, no. Yeah, things. But it is correlating with the GU because both EU as well as GU has the same bearish bias. These are the other confluences. What is the risk factors here? Obviously, the first one you would definitely know that there is low probability POI. First one is the low probability POI, and second is the Asian highs above. Yep, these are the two risk factors. So even if that's the case, I was trading on the stroke of the Frankfurt Open. Price mitigated this POI. So let's see what happened after the price mitigated this POI. Before that, let me take a snap for the future reference and then paste it right here. So let me jump into M15. It's November 12th, right? So jumping into November 12th, here we go. Is there any entry model possible? Uh, I think that's equal, but this candle broke the low. Yeah, this is still there. Technically speaking, this is still there. And price actually took out the lip and then started to push down. Yeah, perfectly all right. So this could be the butane supply within the H1 supply. So that's high probability. So what I can do is I would put out place the sell stop order here, stop loss just above the tiny 150 displacement buffer. So it is 196 here. So let me drag it to 206. And so, perfect. One pip above, one pip below, and targeting 2.5. So yeah, this is a beautiful winner. I could have taken this trade, but I was a bit conservative and I didn't take trades. But yeah, nevertheless, it's a winner actually. So thankfully, actually, I was able to identify this trade at least in the post-session analysis. It's perfect. I must. I think that's I'm developing as a trader, so I was able to identify this missed opportunity. So yeah. Anyway, I was not able to identify this on that day, and it ended up being a no trades day because I was a bit conservative and just wanted to wait for an extra buy side liquidity because I got most of the trades like that during the month of September, and I was not able to come out of that. That's why I didn't take any trades. But nevertheless, I must be able to quickly adapt to the changing market conditions and take and reap the profits. That's where I need to develop in the upcoming months. So hope I'll develop myself. So that's it from today. So just see you tomorrow on November 13th. Until then, cheers guys. Bye.